Hello to everybody, our dear subscribers. FutureTrend channel is back to you. Today is 9 of April 2019. We're ready to start our everyday portion of how we trade, portion of analysis of how we trade, how we consider the current situation among the major currencies that's trading in the world financial markets. Today we will try not only to touch major currencies, but also we will try to touch some euro crosses as well as commodity block of currencies and of course ruble crosses. Among them we will describe the situation around the euro ruble and dollar ruble. And once again, now the situation is looking a little bit weaker for the United States dollar. We seeing that the United States dollar at the moment is not doing so well as before, but we could explain this. We could explain this by first of all, weaker than expected economic indicators coming from the United States. Also, look at the price of the 10-year United States government debt. That's at the moment is around 2.5%. And remember where it was in 2018. Even above 3.1%, as I remember. So all in all, it's more than 0.5% lower. And at the moment, for me, for example, it's really surprising to see that the United States dollar is looking so strong at the moment. Of course, there are a lot of negativity around, for example, around the euro currency. But we suggest that this type of negativity is already priced in the value of the single currency. That's why probably before this week, probably major important economic event in the form of European Central Bank interest rate meeting, the euro we suggest continue to have kind of important upside potential to develop in the coming trading sessions. We continue to suggest that any kind of downtick closer to important barrier 112, this pivotal support barrier, you should use as a buying opportunity. We suggest that probably even during this week the euro currency really has a kind of interesting potential to develop its upside momentum, and we suggest that sooner or later the pair will be back to the level 114 where lies its current downtrend line. And don't forget that not far from that region also lies moving average 200 daily line located at 114.54 at the moment. From a longer term point of view, only break above that level could open the door for another incentive to the upside for the euro currency. But it's a little bit premature to say that at the moment. As regarding dollar yen, like in the euro dollar, we suggest that there is an important upside barrier in the dollar yen located at 112, let's say 14. That's the highs of March this year. All in all, it's also the highs of this year altogether. And we suggest that any kind of upticks closer to this level should be used as a selling opportunity. But also here, the situation is at the moment is from a medium to longer term point of view is bullish for the currency, but breaking below the level 110.14 15 where lies at the moment current uptrend line, and the pair could open the door for another impulse lower for this type of currency. But don't forget that even now we are trading below moving average 200 daily line that's at the moment located, let's see where it is, at 111.49. As regarding sterling, of course, the fate of sterling is in the arm of the British Parliament at the moment. And the situation is really very, very nervous for the sterling at the moment, because the deadline is very close, and deadline is this Friday. Theresa May now is in Europe trying to resolve the situation, trying to find another deadline, another postponement, probably till the end of June, to find a solution in her dispute with opposition leader Jeremy Corbyn. All in all, the situation here is not so welcome for the bullish side of the British currency. That's why we suggest that now it's preferable to have a bearish position in the currency comparing to the bullish one. But all in all, the pair continued to trade inside of the range of 131.75, where lies current downtrend line, and moving average 200 daily line located at 129.73, and it's another important support barrier at the moment. All in all, while inside of this range of two big figures, we should characterize the cable more or less neutral. Dollar Swiss really is looking very stable, but anyway, we suggest that it's time to have short positions in the currency. That's we are doing at the moment, and we suggest that sooner or later the pair will be back to the downside, probably close to the level of 98.60, where lies the uptrend line of 2018-2019. Finally, a few words about some other crosses, euro crosses. At the moment we don't have any kind of positions at the moment. Probably it's time to wait for the European Central Bank interest rate meeting. Commodity block of currencies, we are absent today of this type of currency. Let's see anyway. It's here. It's here, and here you can find that we still have long positions in the Kiwi and in the Aussie dollar, and at the moment these types of currencies not looking so bad, because the oil price are on the upside at the moment, and that's why Russian ruble, Canadian, the loonie, and as well as by the way the Aussie dollar is looking especially strong at the moment. As regarding Russian ruble, probably it's a little bit premature to sell about a further extension to the upside for the Russian currency, because of the current surge in the price of the world oil prices, and the same applies, by the way, for the euro ruble. Anyway, here we can find this first immediate kind of support located at 74, with another one located around the lows of this week at 72.20. But once again, it's a little bit premature to say that ruble crosses at the moment, these types of currency are ready to extend its current downside potential. Let's wait a little bit. And what else? At the moment, probably that's all. An important event of this week, European Central Bank interest rate decision, is waiting for us some later, and we will concentrate around this meeting during our next appearances. At the moment, that's all. We wish you a pleasant and profitable days ahead. Take care and bye-bye for now.